Hello and welcome to the TGIF trade right here in Lagos, Nigeria. Here's what's coming up on the show. Zambia's manufacturing sector hits 9% of gross domestic product. That's highest since 1990. And Egypt plows nearly $20 million into automotive localization for the 2024-2025 fiscal year. Let's go to set for a weekly rally this week. It's great to have you join us. Let's get a check on now what's playing out in the markets that we track, starting with oil. Now, we did see weakness earlier, but yeah, we're seeing a rebound there, 0.69%, $66.83 a barrel. That's for Brent crude. WTI crude, that's trading at $62.73. From this morning, getting back above that $61 earlier, 0.58% up. And definitely we're seeing prices, edge higher right then this afternoon from that earlier drop. Both benchmarks lost about 1.7 and 2% respectively in the last trading session. So we're seeing some kind of recovery right now. Let's get a check on what's playing out with metals now. With gold there. Record highs, 0.3% up. It's green across board there with... let's spotlight silver, at this point, $42.20 per ounce. That's a big move up. Definitely, this was stock between $35 to $32 for the longest time. But we're seeing, after that break above $40 per ounce, I guess we're in price discovery now for spot silver. Platinum, that's up 0.5%, $1,385 per ounce. Palladium, that's about $1,200 at this point. And it's looking quite good for the metals market. U.S. consumer prices rose by 0.4% in August. That's the steepest monthly rise in 7 months, while weekly jobless claims surged to the highest since October 2021 last week. And we know how uncertainty that spurs the metals market there. So we're seeing that impact right there. Let's take it on to South Africa now. We see the statistics agency there. They reported that manufacturing production decreased by 0.7% year on year in July. And Stats SA Industry, the director there, Nikolai Klassen, knows that 7 of the 10 manufacturing divisions recorded a decline in production, with the metals, machinery products division being the main negative contributor. He notes that manufacturers in metals and machinery products recorded a decrease of 3.3% year on year, subtracting 0.7 of a percentage point from the overall manufacturing growth. So that's what we're seeing for manufacturing in South Africa. Meanwhile, also in South Africa, the mining sectors demonstrated remarkable resilience in 2025, with production increasing by 4.4% year on year in July. This represents the 3rd consecutive month of expansion and the strongest performance since September 2024. The sustained growth trajectory signals a robust recovery in his historically significant economic sector, which continues to play a vital role in South Africa's economic landscape. And this consistent growth pattern follows month-on-month increases of 0.4% in June, 3.7% in May, suggesting sustainable recovery rather than temporary spikes in production. So that's what we're seeing in South Africa there. But let's head straight to the markets now. We see trading on the African continent. The Nigerian stock market is extending the winning streak today, but not convincingly so, just by 6 basis points. The all-share index, we're seeing strong buy interest in the banking sector, heavy demand for UBA, Access Corp, Fidelity Bank, and Zenith Bank. That's driving trading volume to about 844 billion naira. However, the insurance index slipped 46 basis points as profit-taking hit stocks like Prestige, Lasaco, Cornhall Insurance. Overall market activity remains subdued, with turnover at 90 million units, worth about 1.8 billion naira, led by Zenith Bank on value and Lasaco on volume. So that's the picture right there on the NGX. And for the Johannesburg Stock Exchange, We're seeing a hold there for 102,000 level by about 352 points, up 0.41%. Let's get a check on North Africa now. The EGX 30, that's 0.77% to the good. Then the Nairobi Stock Exchange closing the green yesterday by about 2 basis points and still holding the NSI at 178 points. Let's get a check on the Gulf region now. We see in the UAE, it's positive sentiment right there. Big 1% jump there for the Dubai index at 6,017 points. Abu Dhabi, that's 0.57% to the good, 10,000 points there. Holding on by about 16 points. Saudi Arabia is a mixed picture with Saudi Arabia index, that's down 0.43%. And we see the Qatari index 0.14%. Let's get a check on the U.S. market. Stock futures were in a little change today. Overnight trading on Thursday after the market surged to fresh record highs. Investors took signs of weakening jobs and the drive to tame inflation. To me, the Federal Reserve will lower interest rates next week. So we're all looking forward to that at this point. Futures on the Dow Jones Industrial Average, that's down 0.16%. So I guess investors are just moving on to the sideline at this point to get a check on what's going to play out. S&P futures 0.14% down, and the tech-heavy NASDAQ is about 6 basis points. That's for the futures market. That gives direction on what's going to happen in the main trade right there. But let's get a review of what played out in the market yesterday from our correspondent, Maria Bird.
The U.S. stock market hit a record high on Thursday as the Dow Jones hit a record of 1.4% up. And the S&P 500 was up at 0.9%, the heavy tech NASDAQ up at 0.7%, and many investors were watching the reports of inflation over the month of August, as it appears that inflation was on the increase. There was also reports of the jobless claims, the highest that we've seen in 4 years. These two factors could have an impact on the pace of interest rate cuts for the U.S. As investors will continue to watch to see if this has any type of impact on the U.S. stock market.
Thanks, Maria. But in Asia now, shares of SK Hynix jumped today after announcing that it had finished developing HBM4, the latest generation of high bandwidth memory seen as vital for artificial intelligence applications. And we're seeing the impact there for the close. Shares rose over 7% to hit the highest since year 2000. That's about 9:40 p.m. Yesterday, marking its 9th day of rally. Shares of Alibaba, Baidu, listed in Hong Kong, also jumped over 6% and 10% respectively after both companies began deploying their own in-house chips to train artificial intelligence. So it's the artificial intelligence story we're seeing right there in Asia. The Hang Seng Index 1.16% close. The Kospi 1.54%. Let's flip over to other markets we track in Asia now. Let's get a check on the Nifty 50. That's not left out of the party. 25,000 points, up 0.44%. All right, let's get a check on Europe now. We have Lars Holter joining me right there. Great to have you, Lars. How's it looking for the TGIF trade today?
Yeah, Ladi, how you doing? Yeah, the markets here not trading much at all. Once again, I can't believe how often I have to start this interview here with the same answer, but markets here, especially the DAX, still searching for just about anything that could give a direction. The market last up less than 0.1%, and it's really, I gotta tell you, unusual for the DAX to stay in as tight a trading range as it has been doing now for months. Even yesterday, of course, after the ECB met to discuss interest rates, markets didn't move at all. Well, maybe, of course, it wasn't as big a surprise because the ECB, of course, left interest rates unchanged, which had already been expected. So it's kind of hard to translate such a non-event into a market mover. Anyway, today there was also some inflation data with prices up 2.2% in August, which was a tad higher than expected, but certainly not dramatic at this point. We still have a few hours left, of course, today, but I don't think that we'll be seeing much more happening in Frankfurt before the trading week comes to an end then.
All right, in other news, Berlin just had a major power outage. What can you tell us about the situation there?
Yeah, most importantly, especially for the people right here in Berlin, the power is back now. Almost all households and institutions are back on, but they've had no power for about 3 days. We're talking about parts of southeast Berlin, where 40,000 households had suddenly lost power. And meanwhile, we know that behind the power outage was not just general weakness in the grid or technical defects. That's, of course, usually the first thing that comes to mind. No, we're dealing with the aftermath of a political attack. Apparently, a radical left-wing group had set fire to 2 pylons carrying high-voltage power lines. Now, some city officials were shocked not only at the attack itself, but also by how the group might have had some insider knowledge concerning how to effectively target those pylons where such a fire could indeed cut off transmission to an entire part of the city.
And what's behind the attack? Why were the power lines targeted?
Well, the group behind the attack actually left a letter giving some clues. According to them, they targeted the military-industrial complex, and they did that by cutting power not only, of course, to those thousands of households, but to a part of Berlin that is called Adlershof, which houses a campus for research and development. It's home to many startups, including tech startups, but also home to some larger companies, including affiliates of Siemens and the German Center for Air and Space. Now, what attackers also targeted, more likely actually, are some lesser-known companies doing research in defense and in artificial intelligence. And they wrote in their letter that they hold these companies responsible for war and genocide. Now, it's entirely unclear if the supercomputers some of these companies are running were actually hit at all. Usually companies with a high dependency on lots of electricity would have generators or some other form of backup. So as of now, we haven't heard anything about major damage to these companies on campus, nor have we heard about possible impact on their work.
All right, I guess it's good news. The power is back. At this point, I guess the investigations will continue. Thank you so much, Lars Holter, for the details there.
Thank you, Ladi.
All right, now let's get a check on other stories right there on the African continent. We see Zambia's manufacturing sector surged on account of for 9% of the nation's gross domestic product, the strongest contribution in over 3 decades. Since 2021, Zambia has attracted more than $12.2 billion in investments, generating power, over 68,000 jobs across manufacturing, mining, and agriculture. Among the most notable ventures, United Capital Fertilizers, $898 million investment, PDV Metals, $100 million steel plants, and Trade Kings Groups, about $55 million expansion in dairy and starch processing. Zambia also completed the domestication of AfCFTA rules in December 2024, positioning the country to take advantage of new opportunities in continental trade. And in Egypt, for its 2024-2025 fiscal year, Egypt has earmarked roughly $19.7 million in its budget. The substantial allocation supports a daring plan to fundamentally reshape the automotive sector through localization initiatives. Finance Minister Ahmed Kuchik announced the strategy, which underscores Egypt's wider drive for industrial self-reliance and economic fortitude in 2025. A core element of this strategy is the aim to increase the proportion of locally sourced components in vehicle manufacturing to over 45% within the current year. This represents a significant acceleration of efforts to strengthen domestic value chains in an industry historically reliant on imports. And we see Kenya is among countries targeted in a £1.9 billion foreign direct investment program for Africa by the UK before 2027. This comes as the UK moves to affirm its commitment to support growth of Kenya's manufacturing sector, enabling the country to tap into the strategic trade deal between the two countries. The Manufacturing Africa program is expected to create at least 100,000 jobs, provides manufacturers, investors with fully funded transaction advisory services to fast-track investment and deliver technical assistance to help transform subsectors on block challenges in enabling the environment. All right, now we're going to check on the crypto market, but before we get into the crypto market, I know it's green on the screen at this point, but let's look at regulation now. Nigeria's regulatory landscape for digital assets, that's evolving rapidly with the enactment of Investments and Securities Act, ISA 2025, and the Nigeria Tax Administration Act 2025. The oversight of virtual assets is being reshaped. While the ISA formally recognizes digital assets as securities, under the Securities and Exchange Commission, the NTAA introduces a broader definition of virtual assets, a new test for classifying them, and potential shifts in regulatory jurisdiction. This raises important questions about the role of the SEC, the Central Bank of Nigeria, and other regulators in managing taxation, compliance, and investor protection. Joining me now to unpack this, we have Peter Enobong, the Nigeria Compliance Officer at Juicy. Great to have you on the show.
Hi, Ladi. Good afternoon. It's good to have.
Fantastic. Great to have you. So let's get a quick check now on what's playing out in the market. So far, they were seeing Bitcoin there in the green, 0.67%, $115,000. Wow, we're seeing that. We're seeing Bitcoin trying to make a move, back to maybe the previous highs. Who knows at this point? Ethereum, $4,515, up 1.09%. And we see Solana there, quite an incredible story for Solana. This was trading mostly at about $200 for the longest time, sub 200. But I guess it's trying to make that big move at this point, 4.43%. $238 for Solana. So, definitely very bullish sentiment going on with Solana right there. Cardano in the red, SUI, that's in the red, XLM, LTC. So a couple of major altcoins there, they're in the red right now. And, definitely if you look at the headline, Solana is on the headline there. Solana's climbed above the $240 level, overtaking Binance Coin to become the world's 5th largest cryptocurrency by market capitalization, at $128.7 billion. The rally, fueled by a strong uptrend since mid-June, has seen the token consistently print higher lows after breaking above the $205 level and the 210,000 resistant band. However, analysts caution that Solana's price now looks overextended, with momentum indicators signaling a potential pullback. Key support levels are pegged around $218 and $208 to $210 zone, which, if sustained, could set the stage for a continuation of the rally towards $260. Then Gemini, the cryptocurrency exchange founded by Cameron and Tyler Winklevoss, successfully raised $425 million on its highly anticipated initial public offering. So we'll get more details on that. But let's try and get Enobong again. I guess, Enobong, can you hear me now? Is it better?
Yeah, I can. Yeah, I can hear you.
Fantastic.
So
I was asking you now, definitely it's all about regulation now, digital assets. Everybody's looking for direction. You want to know who is handling what, whose jurisdiction is, what when it comes to digital assets. So talk to me about the NTAA 2025. Looking at the broader definition there of virtual assets, how does it differ from ISA 2025?
Okay, thank you, Ladi. The thing with it is that we've had these issues before, where we had a bit of confusion between the Central Bank of Nigeria and the SEC on who regulates things like this. But however, we understand that virtual assets have been very much involved in the way Nigerians trade, disburse funds and hedge funds against the Naira over the years. So the ISA itself came to provide SEC the affirmation that they are in charge of what we regard as not just virtual assets, but digital assets. Now, the NTAA came to provide a little bit of preempting, to preempt what the ICA was silent about, on how to distinguish what a virtual asset should be. That is providing rules that were made available in the Huawei's case. But however, for all Nigerians and for all investors, it is glaring that by the sections available in Schedule 5, that SEC in itself is responsible for regulating whatever we want to trade in the virtual space and in the digital space. So both entities agree on what virtual assets are because they both adopted the definition from the FATF, that's the Financial Action Task Force, which defines virtual assets as a digital value that can be used for payment, investment, and the likes of it, and digitally traded. But however, the SEC goes further to give an advanced asset, which is the digital asset. Now, every virtual asset can be digital asset, but not every digital asset can be a virtual asset. So the NTAA is very specific on virtual assets, but SEC goes further to provide avenues for digital assets in itself. So, but however, for the NTAA to preempt SEC, we hope to see if that is the line SEC wants to use in the interpretation of virtual assets, considering that the NTA is improvising that the Howey's rule be used on what a virtual asset should be and whether or not those entities should be taxed. So we would see that as we have investors and players coming into the industry.
All right. So what type of assets will you say are excluded from the NTAA definition?
Sorry, I didn't get you.
I said, what kind of assets will be excluded, from the NTAA definition?
Okay. Like I said, the ISA distinguished between what a virtual asset is and what a digital asset is. In fact, the new rules for the issuance of digital assets in 2022 provided guidelines for how to apply as a visual asset service provider and as a digital exchange operator. So the thing with it is that, like I said, all virtual assets are digital assets, but not all digital assets are virtual assets. So assets that are digital assets but not virtual assets generally should be presumed to go outside the purview of what the NTAA emphasized. For example, stable coins are not virtual assets in themselves; they are digital assets. And why they are digital assets is because they are not decentralized and they are not stored in a blockchain. But however, they have value. They can be digitally traded. They can be used for payment. But applying the Howey's rule to it might still fail depending on how SEC intends to go with the flow. But the NTAA preempting them to use the Howey's rule might cause a bit of conflict. But at the end of the day, we presume that SEC and the Revenue Service would find a way to make investors to be certain about that.
All right, and definitely these are different institutions here working towards, I guess maybe a single goal or multiple goals. But could Nigeria face, regulatory overlap, between the SEC, CBN, and the tax authorities?
Ladi, as a compliance officer, I will tell you it's something we currently face in a level of things because sometimes regulations overlap and it creates a lot of compliance costs, uncertainty, and it bridges investors' trust in the system because if you don't have clarity on the process to take in order to be compliant for regulatory processes, it creates a little bit of anxiety on what to expect. But however, I believe that as players come into the industry players get involved, these things will be made plain and clear. But considering as it is, I think the NTAA really did not conflict the position of SEC, but it only tried to preempt what should be expected of SEC in that industry. So I don't think there should be much views apart from the sake that SEC would really want to understand what we are bringing in as digital assets and virtual assets.
All right, definitely a lot to unpack there. I guess, still early days. Everyone is still trying to wrap their heads around, how to regulate digital assets and cryptocurrencies. At some point, I'm sure we'll have some kind of consensus. Well, thank you so much, Peter Enobong, as the Nigeria Compliance Officer at Juicy Way. Thank you for coming on the show today.
Thank you, Ladi. I appreciate it.
All right, to other top stories in the market now, we see Bitcoin's 30-day correlation with gold. That has plunged to 0.53% there, and that's according to Glassnode. This marks a significant shift in market behavior, with Bitcoin price moving in the opposite direction of gold more often than not. The data highlights how investors are currently positioning Bitcoin as a risk-on asset, decoupling it from the traditional safe haven narrative. This divergence has critical implications for price action, risk management, and trading strategies, as macro volatility, that's heating up. I know they've referred to Bitcoin as digital gold, but most of the time, it doesn't act like gold. Anyway, that's all we can take right now. Those are major markets we track are looking. I'll give you a summary of the close there for the local bourse. That's the NGX on the news at 10 later on. We'll see if you made money or not. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.